Welcome back to Alpha Recap, your post-market breakdown from stockalpha.ai. Markets closed mixed today, and we've got a lot to unpack from AI headlines, corporate filings, and a handful of event-driven moves. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. So, what really stands out here is that one headline, the reported Nvidia-Meta AI agreement. It pushed Nvidia into the lead among early movers and kind of set the tone for a lot of the tape.
Yeah, that headline was the clear catalyst. Markets closed with gains in AI-related names, while other parts of the market faded. The market was very much split today.
Right. And the other thing is the enthusiasm around that deal flowed into AI leaders, but it wasn't a broad-based rally. We saw pockets of real caution, especially in cybersecurity after a guidance miss.
Exactly. Palo Alto Networks issued softer near-term guidance, and cyber names sold off hard. That guidance hit reminded investors that narrative doesn't trump execution.
Big move.
Let's break down the main themes we noticed today. First up, AI headline momentum versus company-level reality.
I mean, when you step back and look at this, the Nvidia Meta story matters because a Meta partnership signals continued hyperscaler spending on AI training and inference. That directly lifts demand for data center chips.
And that's why Nvidia led early movers. A deal like that increases revenue visibility for Nvidia and its suppliers. Orders, commitments, the whole supply chain lift. And investors re-rate the AI leaders.
But honestly, I was a bit surprised by how narrow the pump was. Adjacent vendors didn't all rally. Palo Alto Networks, for example, got hit on weaker guidance, and that overshadowed the theme for security stocks.
Yeah, that tracks. It's a classic story. Thematic excitement meets the reality of recurring revenue and deal cadence. If billings and churn don't hold up, a narrative won't save the stock.
Short reaction, not what anyone expected.
Next theme, fintech and payments divergence. Robinhood showed some life on reports that new product rollouts are driving enthusiasm. Product-led growth can re-accelerate retail fintechs.
Right, but at the same time, Global Payments filed an 8K with governance and D&O changes, which raised execution questions for established payment processors. So you had product optimism on one side and governance uncertainty on the other.
Exactly. Investors need to distinguish where growth is truly product-driven versus where management or governance issues could create headwinds.
Short reaction. Interesting dichotomy.
Now let's hit another big area, event-driven and regulatory catalysts. Hansa Biopharma got a big development. The FDA accepted its biologics license application for imlifidase. That acceptance starts a formal review clock and puts the stock on a regulatory timeline.
And that's textbook event-driven volatility. Once the agency accepts a filing, every letter, meeting, or advisory committee scheduling becomes a market-moving item. Traders will be sizing positions for binary outcomes.
Exactly. You can make a clear play around those dates, but you also need hedges and position sizing because outcomes are binary, approval or additional data requests.
We also saw a flurry of Form 8Ks across financials, payments, and mining. Everything from material agreements to executive changes. Those filings often create short-term trading opportunities and sometimes signal longer strategic shifts.
Okay, big picture number that popped off the page today. Callan's Nuclear Decommissioning Trust Study. Trust balances rose to about $100 billion in 2024, roughly a 23% increase since 2022, or about $20 billion higher.
That's significant for utility investors. Better funded decommissioning trusts reduce the odds of big cash calls or rate pressure down the road. But there's a catch. Those gains came largely from equity market appreciation, so they're exposed if the market turns.
Right. The fix is not ironclad. If you get a big equity drawdown or a shift in asset allocation within the trusts toward riskier assets, that tail risk reappears.
So what really stands out here is that more funding is good, but it's not a guarantee against future shocks.
Let's talk about some of the debates people were having today. Debate number one. Is AI momentum durable, or is this just headline-driven rotation?
Proponents argue that vendor partnerships like Nvidia-Meta expand addressable markets for semiconductors and AI services. Skeptics point to guidance misses at adjacent vendors and say you need sustained enterprise spending cycles to prove durability.
And that's the heart of it. Are we seeing enterprise CapEx that will persist for quarters? Or are these one-off hyperscaler moves? Watch follow-up commentary and guidance upgrades or downgrades to judge durability.
Another debate. Are corporate 8Ks just routine housekeeping or early warning signs? Some filings are mundane, but material definitive agreements and leadership changes can be real signals of shifts or stress.
So you can't ignore them. They're a catalyst map, worth scanning because the exhibits often hide the real story.
Quick hit on activism. A funds disclosed a thesis on TFS Financial Corporation, and that can mobilize interest in small-cap regional banks. Activist engagement often leads to buybacks, board changes, or strategic reviews.
For small-cap trackers and event investors, monitor 13D filings, insider activity, and any follow-on press. Activist interest can be transformative for these names.
Okay, time for practical implications. Who should do what coming out of today?
Growth in AI investors should stay long if they believe but validate concentration risk. Make sure the AI exposure maps to revenue visibility and supplier confirmations. Watch Nvidia guidance and any Meta CapEx disclosures closely.
Event-driven and biotech traders. Build a calendar around Hansa's FDA review and size positions for binary outcomes. Options and predefined stop levels are your friends here.
Value and dividend investors who own utilities should take comfort from the improved trust funding, but continue monitoring trustees' asset allocations and interest rate sensitivity of liabilities.
Retail and fintech watchers. Robinhood's product rollouts look encouraging. Track daily active users, funded accounts, assets under custody, and monetization of new features, versus payment incumbents facing governance questions.
Activist and small-cap investors. Gator Capital's push on TFS Financial is exactly the kind of catalyst that can force strategic changes. Watch for capital allocation moves and board shakeups.
Risk managers. The split tape argues for selective hedging. Options collars on concentrated growth exposure and extra attention to liquidity around earnings and FDA dates made sense today.
All right, strategic considerations. 5 quick things to take away. 1. Treat AI headlines as directional, not as portfolio blueprints. 2. Use corporate filings as a catalyst map. 3. Biotech traders should date the calendar and size for binary outcomes. 4. Long-term investors should factor funding level dynamics into liability assessments. 5. Rebalance for dispersion. Trim concentrated winners into strength.
Yeah, absolutely. Dispersion was the name of the game today. Winners in AI versus guidance hit names elsewhere. That creates active opportunities.
Final takeaways before we go? First, the Nvidia Meta report drove a rotation into AI leaders, but today's action was not a blanket risk-on. Second, company-level guidance still mattered. Palo Alto Networks' miss proved that. Third, event and regulatory catalysts like Hansa's BLA acceptance will keep volatility elevated for certain names. And fourth, improved decommissioning trust balances help utilities, but they're exposed to market swings.
So, bottom line, trade the calendar, size for binary outcomes, and don't let headlines replace hard diligence.
Perfect. If you want a short checklist, confirm deal terms after AI headlines, scan 8K exhibits for material impacts, map FDA timelines for biotech, and consider selective hedges for concentrated growth exposure.
All right, that's a wrap. Thanks for listening.
Thanks for joining us. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next time on Alpha Recap.